Please don't get fooled. The altcoin season is not here. And I totally get it. When you look at the last performers, right? When you look at Aave being up 16% in 24 hours, Pancake Swap now back up again, 13%. When you look at Bitcoin Cash in 1 week, 77%, then of course it looks like it might make sense to buy back into altcoins. We even got that question in the premium chat. So there's the premium membership where you can ask me anything. And we had that. Altcoins outperforming Bitcoin. Could we be seeing some more risk on sentiment? This was the question by Michael. And then this is the chart I held against this. So 1.5 years of altcoin performance relative to the rest of crypto. And this is the current rally that we are seeing. A little blip in an ocean of long-term altcoin underperformance. Crypto YouTube is also jumping on all of this. These pump next. These altcoins are next to pump. Huge rotation beginning. And of course, Aave and Bitcoin Cash are also mentioned over here. And then look at this. Twitter trends, altcoin season. A trending hashtag. And so when there's all this noise, it's super important to stick with whatever trading rules you have long-term established. You don't just want to get influenced by the hype of the day, right? Otherwise you buy PP coin when it's really high, or you sell your Bitcoin when it's really low because everybody is panicking. You don't want to be one of those people. You want to do the exact opposite what the masses are doing. You only want to jump on a trend when it's a solid one. And in order to identify the trends, let me introduce you to the best simple moving average and exponential moving average for total 3. So this is this chart over here. What is total 3? Total 3 is cryptocurrencies market cap except Bitcoin and except Ethereum. So you look at all of crypto, but not the 2 major cryptocurrencies. We look at their market cap, what are they worth all together, and you then try to time the trends, right? Are the altcoins in aggregate rather trending upwards or trending downwards? And you could just eyeball this, but we don't do this, right? We don't eyeball things, we measure things. And so what can we measure here for trends? We can measure if the price is currently above a moving average or below a moving average. When it's above, we tend to rise. When it's below, we tend to fall. Now the problem is, what duration for a moving average should we take? So let's say you're here on TradingView and you add moving average right over here, and let's draw this in white, and let's take away the others for now. So we have here a daily chart of total 3 of the altcoin market, and we can now adjust the duration. So we could say, okay, maybe we take the 20-day, maybe we take the 30-day, maybe we take the 50-day, right? The more you lengthen this duration, the smoother this moving average gets, right? I'm now increasing the duration. See how the moving average gets further and further away from the price. It smoothens this out more and more. And the idea would be, again, you buy whenever the price is above and you sell whenever the price is below. But the question is really, what's the best duration? Because you want to be selling relatively early whenever the price turns around, but you also don't want to have too many of these failed signals, right? Where you buy in and then sell again, and you buy again and you sell again. You have all this trading costs and you tend to buy high and sell low. So you want to have as few of those failed signals as possible. But at the same time, you want to catch those trends and exit as quickly as possible when we turn around. So instead of just randomly guessing here, what's the best moving average, right? And say, it might be the 150, it might be the 100. Let's just go with something random. Instead of doing that, we backtest. And this is one of the backtests. So in white, we see the price of Bitcoin. In turquoise, we see the result of the backtest. So a massive outperformance. This is a linear scale, right? You can barely see what happens in the early days. But on a logarithmic scale, this becomes a bit more apparent. So we bet on falling prices during bearish times. We bet on rising prices during bullish times. And if we remove actually the total 3 price here, right? When we take this away, then we really see how nicely this outperforms in a very consistent manner, right? Each of those horizontal lines here are 10x. This is a logarithmic scale. So a very nice constant growth. So that's for the simple moving average, which is, by the way, the 30-day. We will come to this later. Then we've got something very similar for the exponential moving average, which is the 127-day. So there are two different kinds of moving averages, but that's not really the part of this video. Now, what duration do we want to take, right? What's the best length for a moving average for total 3? Here's the result of the back tests that I've done. So on the x-axis, you've got the duration in days, and on the y-axis, you've got the annualized performance. And so over the time period, so I started this backtest with data in July of 2017. You just bought and held altcoins over this time, then you would have gotten on average with a well-diversified portfolio 14% per annum. So that's the black line here, buying and holding. What we see is that when you trade, right, when you go long and short, when you bet on rising and falling prices, you tend to outperform buying and holding. Now for the very short durations, that's not true because we also have trading fees in here, 0.2% for every trade. But once you go above a very short duration and the trading fees don't matter that much anymore, you outperform buying and holding pretty much with any duration. And it's no insignificant outperformance, right? 14% buying and holding. And for a lot of those trading approaches, we got close to 50%. And that's for every single year, right? This is annualized. Now here's the best of the moving averages. It's the 30-day simple moving average. So this is how this Excel sheet here works. We've got a little macro where we can set all kinds of parameters. What's the trading fee? Do we want to have any gas fee? What's our initial capital? Do we just want to buy when we go long? Do we also want to short whenever the price is below the moving average, or do we just want to be in cash? Right? We can adjust all of this, and that's then the result we get. So let's actually, for the fun of it, only buy but then get into cash whenever the price goes below. What's then the kind of outperformance we could get? So let's click on this, iterate. This you can, by the way, download in the premium membership section, right? So it's thebitcoinstrader.com. It's at the bottom here of the screen. You can download that Excel sheet over there and then enter your specific altcoin and do a similar backtest. So let's keep this running for a while. This does take a bit because it trades now the entire history from 2017 until today with those new parameters. And it does this basically 200 times, right? Up to the 200-day simple moving average and also exponential moving average. So basically, this sheet now, just within a minute or probably 30 seconds, made 400 trading simulations. And we can now see the outperformance is slightly less. It's still the 30-day SMA that's the best. But now when we look at this on the chart over here, we see sometimes we simply just go sideways. That's when we are in cash. That's when the price is below the best simple moving average, right? Below the 30-day. So in this case, we only protect ourselves from the downfall. We don't really make money from it because we're not shorting. So a quick view here on the premium website over here in the statistics library. So that's over here. You can download all of those Excel sheets for different assets, for different indicators, relative strength index, double exponential moving average. There's also the Larsen line in case you're following CTO Larsen, a backtest on that. Super trend indicator, all kinds of backtests, right? You can simply download the sheets here. And there's also videos, so that's here in the tutorial section, on how to actually build those Excel sheets and how to adjust them. Okay, so each of those boxes here, it is a separate video explaining how to handle all of this. So let's go back again to the current situation. By the way, look at this, right? I have here a best exponential and simple moving average. This is a custom indicator that you can also download over here. So there's actually an overview of the best moving averages here, right? Strategies, best moving averages. There is an indicator with some code that you copy paste into TradingView, and then for a few assets, it draws you for that specific asset the best of the moving averages. Currently, this is the situation. This is total 3, and it is below both the best exponential moving average and the best simple moving average. So we did see a bit of a rally. We did go up from the bottom by 6.5%, but it's not yet enough to even cross the SMA, which does see a few fake outs. The EMA is longer in duration, so it sees less fake outs. I think to be really bullish on altcoins, we have to at least go up by another 7%. That's where I'd say, okay, the US dollar valuation of altcoins might go up. It doesn't necessarily say that the alts in general will outperform Bitcoin, but at least US dollar valuations could go up. For outperformance, you actually want to look at something else. And this is actually what I prefer doing because that's my fundamental idea in crypto. The idea is you want to get compensated for additional risk that you're taking. So when you buy an altcoin over Bitcoin, you want to have your altcoin to perform better than Bitcoin. When you now have a portfolio of altcoins, you want altcoins in general to outperform Bitcoin. And one way to look at this is, again, to look at total 3, but this time there's a bit of an adjustment here. We also remove the stablecoin market caps of DAI, Tether, USDC and BUSD, and we look at this as a fraction of all of crypto. So the altcoins minus the stablecoins as a fraction of all of crypto, which is currently at 18%. It's not that much actually. And see how this tends to underperform. And see how this recent rally is really no rally at all, right? In relative terms, the altcoins are still doing poorly. In relative terms, they are going down, and they tend to really just outperform when Bitcoin has already risen, right? This was when Bitcoin peaked at around 40K, right, at the beginning of 2021. And then it continued to go sideways. People looked for more risk. This is then when the altcoins outperformed. They outperformed the rest of the crypto market by 170%. But since then, there's rather a bleed. And there are temporary rallies of roughly 19%, but the general tendency is really down for the alts. So be careful with videos like this. Be careful when you see a few select altcoins outperform the last days. If you pick the right alt, of course this can play out, but how high is the likelihood that you really went heavy into Aave yesterday? If you own a lot of Aave, you're probably also owning a lot of other altcoins. And if you have an altcoin portfolio, that portfolio in aggregate has probably underperformed Bitcoin. At least over the last weeks, and even in the last few days, the outperformance is pretty much not existent. Now, this is one of many backtests I've done over the years. Backtests on different trading approaches, backtests on different assets. And that's, I think, what makes this channel different from others. We only use approaches that historically worked well. And even though past performance is no guarantee for future performance, I think it's the next best thing that we have. We simply work with the assumption that psychology doesn't change too much over time. When people are down 80%, they're likely going to react very similar, no matter if this was in 2016 or in 2019 or in 2022. If an altcoin suddenly has a spike in attention, does it make sense to buy? And if yes, under what circumstances? Those kinds of structures don't necessarily change with time. And so we've done all kinds of backtests, and you can download all of those Excel sheets for the different backtests in the premium membership. There are also tutorials specifically for backtesting. How to build such a sheet, how to change such a sheet. All of this is very valuable content, and it is a proven approach that helps to ride those positive waves whenever we are in a bull market, and that helps to protect us whenever we are crashing down. Now, there's more information around the premium membership at thebitcoinstrader.com, a dedicated video on this. And the price isn't that cheap. It's $75 per month. But here's the deal. If you are not happy with the content, if you're not happy with the support in the Telegram channels, if you don't think that you get enough alpha out of this content, then simply message me in the very first week and I'll refund you 100%. So there's zero risk for you. Most people that sign up, they stay signed up because they get more money out of it than they spend. But feel free to simply just try it out yourself. You can watch all the videos, you can download all the Excel sheets. The reason why most people stay subscribed is because of the community. It's because the trading opportunities we share with one another, and it's those opportunities and the timing of those opportunities that make us win over the long run. So check it out. It's thebitcoinstrader.com, 100% risk-free for you. I don't know a reason why you wouldn't try it out.